Infometrix principal economist Brad Olsen joins us now. Brad, many were expecting another hike today, but not this indication that we might have finally reached the peak.
That's right. Most economists were expecting that 25 basis point increase to the official cash rate. It's now at 5.5%, but we were all wondering if the Reserve Bank might have to do a lot more work, and in fact, if they might have to toss up a 50 basis point increase. In the end, they didn't even look at that option. They tossed up between the 25 that they went with and actually no change at all. And for the first time, the Monetary Policy Committee decided to take a vote and voted 5-2 in favour of going ahead with that small increase. Importantly, though, they signalled that they don't think that there is any more work to do. They think that they've done enough to get inflation back under control, and their future pathway doesn't have any further official cash rate increases. That's quite a shift from expectations. Many people were thinking that migration being a lot higher than expected and the government's budget might both cause the Reserve Bank to have to push further to try and get inflation under control. As it is, they've taken a very forthright stance. They think they've done enough. The drinks break has been signalled.
Okay, so when can we expect to see the OCR start to drop? And does this give more certainty?
Well, and that's the question I think that everyone has immediately moved to. You saw financial markets, for example, come back. They'd been pushing higher since the budget on expectations there might be more work to do. But the Reserve Bank, at the same time as saying that they are pressing pause for the moment, have also said that they don't think that interest rates will come down anytime soon. Their forecast track doesn't have the official cash rate moving again until the September 2024 quarter. That's over a year away from now, and is a pretty strong signal from the Reserve Bank that although they think they've done enough to get inflation under control, they don't want to take their foot off the brake too quickly, and so instead they'll be keeping that pressure on the economy for a while yet. For a lot of borrowers, there's still a sigh of relief, I think, tonight. People were still wondering how much further those interest rates could rise, how much further their own repayments might go. That's not to say that mortgages will all of a sudden be cheap, but at least there doesn't look like there's as much coming down the pipeline. For markets, for households, they will be wanting to see that official cash rate start to move lower at some point to give them a little bit more oomph in the tank when it comes to the economy, when it comes to their own spending. The Reserve Bank, though, after saying that it's done with the raises, also not putting cuts on the table just yet.
Okay, Infometrix principal economist Brad Olsen, thanks so much for your analysis.